Hello, and thanks for joining us today for our webinar on utilizing TValue amortization software for purchasing notes. When it comes to purchasing notes, being an investor or brokering notes, whether you're new or a seasoned investor, there's a lot to know, a lot to think about and understand with regard to that. And for example, where to find notes, what notes to buy, what notes are good or more desirable, potentially based on risk, and also structuring deals to get cash flows that you want with a yield that you want and to get the seller's attention and beat out competition. And that's what we're going to talk about today, structuring deals, creatively structuring deals to make it a win-win situation or to make it a good opportunity for yourself and also for that seller that you might be buying from. In this webinar, we might go through a little bit quickly, and for some of you that maybe are using TValue or have used TValue over the years, you're going to be a little more familiar. But if you're a little new or if you haven't used TValue, it may seem like we're going pretty fast through here, but keep in mind you can always give us a call or shoot us an email if you do have questions on anything. And also we'll have a PowerPoint available for you to review the webinar along with the recording, and you'll have the slides to look at. So the information will be available. Our presentation team today is Marcus Malika on the left, that is me, and Bill Mencarow on the right from the PaperSource Inc. I want to start by giving you a little background on TimeValue software, founded by a CPA from PricewaterhouseCoopers back in 1984. So we've been software developers for the last 28 years. And here at TimeValue Software, we have more than 1 million global users of all product lines in over 100 countries. So from the TValue software to other tax products that we have for interest and penalties and other niche areas. We do consider ourselves the experts in time value money calculations with the TValue software as our flagship product, and all top 100 accounting firms use TValue software. And also to note, TimeValue software has been supporting the note buying industry since the mid-'80s, and TimeValue software reps did presentations of creative deal structuring. We also have been recommended by numerous lecturers in the industry from various seminars that were speaking on note buying or brokering. So we've been in the industry, and we've stood the test of time over the years, and it's nice to be working with the PaperSource Inc. now to get back and support and provide some help in the industry. A little bit on the PaperSource Inc. They've been in the business since 1987. Educating and bringing together note investors and brokers, and plenty of information to get and learn from the PaperSource through the PaperSource Journal, e-courses, home studies, seminars, forums, and a blog. And then also a source of information. They have the registry of note investors in print and online, so a lot of information there. And you can also go to their websites, cashflows.org or papersourceonline.com for more information or to get a hold of Bill Mencarow. Our agenda today is going to be a tour of the TValue software to give you an understanding of the ins and outs of the program and various features and capabilities that you're going to utilize in your deal structuring and being creative to present compelling offers to sellers for yourself. And doing that, I will set up a sample note that we're going to use throughout the presentation so that as I go through, I'll kind of show you some of the benefits of the program as I set up that note. And then from that, we're going to use some sample purchases, one in purchasing a full note with various yields, and then we'll do some contract to sell options, one for cash and future payments, and then also for those of you that just want to invest in payments in the future only. As far as questions, if you do have questions, like I mentioned, you can email or give us a call. We definitely want to be able to answer your questions, help you out in any way that we can. So whether they are directed to us here at Time Value Software for the deal structuring, or to Bill at the Paper Source for information on educational materials and just kind of getting more involved in the industry. So let's go ahead and move on here into our sample note, and this note is going to be a $50,000 note with a 10-year term, an interest rate of 8%, and our monthly payment, our cash flows, will be $606.64. So what I'm going to do is take you over to the TValue product and set up this note, as well as giving you a tour of the program. So let's go ahead and switch over to there. Okay, so when you open up the TValue software, you're going to see a screen like this here. And this is going to be our cash flow data window. And you also see here the amortization schedule. So you can essentially toggle back and forth through the cash flow, which is where you'll enter all of your information for the deal, structuring the deal, and then your results will immediately show up on the amortization schedule, which can be customized to show information that you want. So on the cash flow data, we'll go ahead and start with the label field, and then tab or enter will take you through the program. So using TValue, you essentially want to go through and build the schedule as you go. So it's kind of nice to just tab or enter through it versus just clicking around the screen and entering information. So let's go ahead and put a label in here as a sample purchase. And also, let me go over here to the right. If you're taking a look at these double arrows, if I click on that, it brings up a dialog window where I can really enter in here all the information that I want to make note to myself, or with regard to the note purchase or the negotiation. Whatever I put in here is going to show up on my amortization schedule. So anything you really want to remember that's important, you can put that in here almost as much as a Word document. So whatever your naming convention would be is what you might put in that label field, whether it's your client or whatever type of case you're working on. In the compounding here, if I click the drop down, TValue defaults to monthly, but you can see we have 13 different ways of compounding in TValue, from quarterly, semi-annual, annual, exact days, etc. So depending on what type of note that you're structuring here, or trying to match as far as maybe another agreement that you're trying to put the values in here and recalculate what if scenarios, you'll have different options of selecting the compounding. We're going to use monthly today. Then when I tab over to the nominal annual rate, we're going to put in our 8% for our sample purchase here. And if I click the double arrows here to my right, or to the right of the nominal annual rate, you'll see that TValue calculates 4 interest rates. So other than the nominal annual rate, you have the effective, periodic, and daily rate. So if you know one, you can always back into the other. Now coming down to line 1 underneath the loan event, if I click the drop down, you can see that in TValue you can do virtually any time value money calculation, but here you have different categories, so different event names that pertain to loans, leases, deposit withdrawals, investment returns, and then these event names are customizable as well. So if you want to rename them to be more specific to what you're working on, you can do that as well. Underneath the date, I'd put in my origination date of the loan, or the date that this loan is going to start. Let's just go ahead and put it in the date here. And in TValue, you only need to put in 6 digits. So let's put in 090112. And then TValue will put in the rest of the slashes and numbers in there for you. We'll put in our loan amount or note amount here of $50,000. In shortcuts in TValue, I can just type in 50 and the letter K, and it fills in the rest for me. The number column refers to how many times the event on that line occurs. So we have one loan or one note. The number is just going to be 1. And then as I enter down to line 2, it defaults to payment. If I click the drop down, you can see that I can add to the loan. I can do a payment, which we'll do, or I can even do a rate change. So a few different options here and a lot of flexibility here in the program. The date's going to default to a month later, But if this date is irregular in any way or breaks up this month period here, all I have to do is enter in the 6 digits. But we'll leave it to a month after the loan date here. I'm going to type U for unknown in the amount field, and we're going to go ahead and solve for this variable. And in TValue, you can solve for any one variable at a time, whether it's the payment amount, whether it's the term, which is the number column there, the interest rate, which I can back into, or the loan amount or the present value, which we'll be using today. I can put unknown there and solve for example, what I would pay for a note with a given interest rate or yield. So in the number column, I'm going to put 120 to refer to 120 monthly payments in our 10-year term. The period is the frequency of the payments, and the end date is the last day, the last payment of that series. I go ahead and calculate, and I get my payment of the $606.64. If I click the amortization schedule, you can see that immediately this schedule is created. Our label field and any notes would be up here, our cash flow information here, and then the amortization schedule, which shows you payment information, interest, principal, and balance information as well throughout the whole schedule or the 10-year term here. I want to take you down to the bottom of this amortization schedule to show you. In TValue, we also have the Reg Z disclosure box here, so with an APR calculation. So if you have points and fees or any closing costs that might be in a loan, it's going to affect the APR calculation, and I'll show you how you can do that as well. But just so you know, that information's here, and you can kind of set up this amortization schedule to contain the information that you want. So customize it for headers, different headers or footers with your own company information, fonts, etc., and even different report ranges or date ranges that you want to see on your schedule. And almost as important is the send to Excel and send to Word feature. So if you have a schedule that you want to email to a client or to a seller, you can send it directly from TValue to Excel and save it as a PDF or email the Excel schedule, however you prefer, if those people do not have TValue. Okay, so back on the cash flow data window, just to point out a couple other features of the program or capabilities of the program. If I right-click on a loan event line, I can select the points and fees option. Here I can put in points paid on a loan, prepaid interest, or any closing costs or other charges that might affect the APR calculation. Also, if I right-click on a payment line, I have what's called our special series in TValue. And here I have several options for any kind of creative deal structuring, from interest-only payments to fixed principal plus interest, or monthly skip, which is something where you can select different months that either zero payments are made, or maybe every December there's a lump sum made on the loan, and you can put in that amount there. So some different options and flexibility here with those pretty much any given month. You have a skip series, a percent step, amount step. If a payment increases every year or every couple years or every so many months, I can add that in here, and then again discount that back and get a present value calculation on that. I can also do principal first payments as well. One last thing before we move on, if I click on this text down here which says normal amortization, this is going to bring up my TValue setup window. So I just want to point out the compute method here, where we have normal amortization with compounding. We also have U.S. rule simple interest where there's no compounding, and also Canadian rule of 78, which isn't used too often. Okay, so here we have our sample note with our cash flows, our $50,000 note, the $600 cash flows for 10 years. Okay, so pretty basic to set up. Like I said, you just kind of build the schedule as you go. Now what I want to do is take you back to our slides and show you a couple options as far as purchasing a note with various yields. So this first example is going to be to purchase a full note, purchase the cash flows of the note that we set up here. And the question is, what should you pay for a 12% yield? So you want to buy these cash flows, but you want a 12% return on your money. Okay, this is going to be pretty easy to do in TValue, one of the easiest things you can do in the program. Let's take you back to TValue, and just show you how this is going to work. And what I'm going to do in some of these examples is I'm basically going to leave the cash flows in the note that we have up here, and I'm going to just recalculate different examples or what-if scenarios that you might have as you go through different options for yourself. So what I would do in discounting that back to get basically a present value at a 12% yield. So what I'm going to do is put 12% in the nominal annual rate. That's the return I want. And I want to know what I should pay to get that 12%. What should I pay today, or in this example on 9/1/2012, to get these cash flows and get a 12% return on my money? I hit calculate and I get an amount of $42,283.12. So if I invest that, I'm going to get a 12% return on my money with these cash flows. Now from here, I would just go up and hit save. I can save this schedule maybe as scenario 1. So let's say sample purchase 1. Okay, and then what I'm going to do is kind of go through some different scenarios with these cash flows. So let's go back to the slides and just to present another option for you as far as purchasing a full note. And in this example, what should you pay for a 9% yield? Okay, and just seeing how easy it was for me to do that for 12%, it's going to be just as easy to do at 9%. And then you'll kind of see what we're going to do with that. So let's go back into TValue and show you how easy it is to create another scenario. I've already saved the one, so now I'm going to put 9 in the nominal annual rate. Again, I'm going to put unknown on line 1, which is how much I should pay for the 9% return. I hit calculate, I get $47,889.19. So this might be my what if scenario 2. So if I want to keep using these cash flows, keep creating a schedule that I can look at and compare, I'm going to then go to the File, Save As menu, and then I'm just going to change it from scenario 1 to scenario 2, and then just save it. So now I have 2 schedules so far, one at 12%, one at 9%. Now, in doing this, you could invest in either one of these notes and get that return, or what you could do, as I take it back to our slides in the presentation here, is I can contract to sell for cash. So let's say I buy this note and have an agreement with the seller, and I would get my 12% return. We've negotiated $42,283, and I have an investor that wants a 9% return on his money. I sell it to him for $47,889, and I get a profit, or you get a profit of $56.06, $5,606. Okay, not a bad little profit just for being the middleman. Okay, so now moving on to provide a couple other options for you. There's obviously, this is our option for cash profit. Now we're moving on here, the world's greatest retirement plan. So there are different ways to look at this. You could, like we did already, contract to sell for cash profit, or depending on what your needs are or wants are, you could take some cash now and get payments later. So there's some numbers in here I'm going to explain a little bit, but you could sell enough payments to an investor to get, here we have $44,250, and you may look at that and say, well, why would you want such an odd amount like that? And I'll explain that to you, but maybe the thought is I want to have roughly $2,000 cash up front, and I want to have payments in the future. Okay, so the seller is going to get his $42,283. I'm going to get $1,967 up front. So let's go to TValue, and I'll show you how this works. And I'm going to also show you and explain why that amount is odd, and I basically wanted to keep that simple there with the cash flows, and I'll show you how that works. And you can back into different variables in TValue. So, okay, so if I want to sell these cash flows and get some cash up front, so I need to pay the seller $42,283, but in our scenario here, we're going to get to $44,250.52. This investor that invests this $44,000 is going to get a 9% return on his money. So how many cash flows, or what is he going to get for that? Okay, it's going to change in the number of cash flows he'll get. So we'll put unknown in the number column and hit calculate. So that investor with his amount of $44,250 to get a 9% return, he's going to get 106 payments of the 664. Well, in this note we had 120 payments or 120 cash flows here, so this investor gets 126. So this is a scenario where I get cash up front and I get payments. So I want to take this back to the slides and give you a summary of how this is going to work. And you could obviously create different scenarios that would work out for you and also work out for the other parties involved. But this investor is going to put $44,250 in to get a 9% return. So he receives the first 106 payments of the $606. I then take from that and pay the seller the agreed amount of $42,283, and the difference in that amount you're going to receive as your profit, your cash up front of the $1,967. What about payments 107 to 120? You get them. Not a bad deal here, right? So depending on what your needs are and trying to set up some cash flows or trying to set up a retirement plan for yourself, you got a little cash up front, you get some payments in the future. So the next 14 payments of $606 you get for a profit of $8,492. So between your upfront cash and the amount of those payments, your total profit is going to be $10,460.36. Okay, now I want to go back to TValue and just kind of explain this odd amount here a little bit and show you how I just kind of simplified that. And now when it comes to buying these cash flows, there's going to be a lot of different scenarios where you might buy partial payments, you might buy balloons, you might buy, whatever it would be that you might be able to create to work out. So this amount here, and I was thinking roughly, I want roughly $2,000 up front. But what will happen here, and let me just show you how that would be. So if it were $44,283.12, and I wanted to see how many cash flows I would get in TValue, so I put unknown there and I calculate. Now what happens, I get this rounding amount, and what this means is that I would get, or the investor would get 106 cash flows or 106 payments of the 606, and then this odd amount is just different than the 606. So essentially, it's either a last payment of $71 plus interest, or I can back into it and see what I would offer him. So in this case, what I did was put in the amount of the 106, so I knew that he was going to get roughly 106 payments, and then I just back into this amount to say, okay, if I give him 106 payments and I want some cash, what is that going to be? So I wanted roughly $2,000, and give or take, it's going to be a little different, but it's an equal number of $606 cash flows. There's no odd amount or small balloon amounts in there. So I hope that makes a little more sense for you. Okay, I want to go back to the slides and move on to the next scenario here. And more options available, obviously. Cash up front with some future payments, or you could just put it all away for the future by selling just enough of the payments to the investor in order to pay the note seller. So we know that the seller is going to get, or the agreed amount is the $42,283. So if I want to sell it to the investor and sell it to him for $42,283, I'm going to solve in TValue for how many cash flows he's going to get by investing that to get his 9% return. How many payments will he get? So in this scenario here, sell the investor enough to get his 9% return on the $42,283. That amount is going to go directly to the seller. I get no cash up front. So, or you get no cash up front. So what do you get out of the deal? Let's go back to TValue and structure this deal. Okay. Again, I'm going to use the same schedule here, and for each what-if scenario or each case here, you can do a file save as, and save it that way you can kind of compare the options and see what's going to work out best. But what I'm going to do then is, in the amount field, I know that I'm going to sell to the investor, $42,283, which is what I need to pay the seller. He's going to get his 9% return. The question is, how many cash flows does he get for that? Unknown in the number column, I calculate the investor is going to get 99 payments, the first 99 payments of this note. So that's going to be a 9% return on his money, 99 payments of the 606. Okay, so then that leaves my profit. I got nothing up front, but I get the next 21 payments of 606. So let me take you back to our slides and give you a summary on how this is going to work. So investor receives payments 1 through 99. He's getting his 9% return. You're going to receive payments 100 through 120. So therefore you get 21 payments of 606 for a total profit of $12,739.44. Okay, and you can massage these numbers in TValue. So if, as a note here at the bottom, if the investor agrees to less than a 9% yield, maybe they only want 7%, or that's what they're shooting for, your profits go up. And TValue is going to make this very easy for you to look at these scenarios and create the best compelling offers to a seller and offers to an investor. I know I went through some of these examples fairly quickly, and like I said, if you're a long-time user, you've been using TValue for a little while, this might have been pretty easy for you. If you're pretty new, like I said, give us a call or shoot us an email. We'd love to help you out. We're available to help you out. And anything else with regard to understanding a little more on the industry of buying notes, and Bill Mencarow is going to be able to help you there at the Paper Source Inc. Next thing here, benefits of using TValue software over Excel. And we know a lot of people use Excel, and we use Excel here often too. But TValue, a few points here. TValue is going to be accurate. It's going to be very accurate. It's going to be quick and easy to use, just as you saw when I went through here as far as creating different scenarios. Very easy and quick to use. So calculations are error-free. Excel, you need to manually create formulas, which are prone to human error. So a lot more room to make a mistake in there when you have to create those formulas. TValue is built on algorithms, so you put in the right dates, the right amounts, and TValue is going to give you accurate numbers. You also get detailed amortization schedules immediately. Set up the cash flows, the amortization schedule is automatically created. It's very quick to do what-if calculations, as we did today, in creating 3-4 different scenarios to look at. From the simple to the complex, the first couple we did, just as far as discounting at various yields to get a present value or an amount that we would need to pay for cash flows, pretty simple, and doing something that's more complex, which hopefully we'll be able to do in some future webinars, where you might want to buy partial cash flows. You might want to buy, instead of, in this example, 10 years of cash flows, maybe you buy a couple years, maybe you buy 5 years, maybe you want to buy a balloon, something like that. So there's going to be a lot of different options. The more complex that those calculations get, the harder it's going to be able to create in Excel, and TValue is going to be able to handle it pretty easily. You also get unlimited customer support with TValue with our maintenance program, which gives you unlimited support. We also have access to training videos and things like that. So if you're interested in purchasing TValue software, the Paper Source Inc. is offering a discount. Go to www.cashflows.org/tvalue.html, or you can give them a call at the 800 number here. And TValue normal price is $149. By registering or attending the webinar today, use the coupon code PS discount. You'll get $22 off of TValue. I was mentioning a little bit on the TValue maintenance front, unlimited product support. This is something where you can call us anytime for help. You can send us an email. We have a library of training videos on TValue, and part of the maintenance program, you basically get a new TValue product every year. So every update or upgrade that comes out, you're going to get that with the maintenance program. So we are here Monday through Friday from 7 a.m. to 6 p.m., and we'd love to help you out. Love to hear from you. Here's our information. You can go to our website at www.timevalue.com or email us at support@timevalue. Look forward to hearing from you. And thanks again today for joining us for the webinar, and we look forward to seeing you at future webinars. Have a good day.